Soaring energy prices, airlines are paying more for fuel, and that could make already sky-high airfares even more expensive. We want to bring in Steve Trent. He's Citi's research analyst. Steve, it's great to see you. We heard from Delta CEO Ed Bastian last week. He was saying that, quote, demand is off the charts. Now we're seeing the price of energy, crude, everything continue to move to the upside. What does this mean for airfare over the next couple of months?
Yes, good afternoon, and thank you very much for having me. So certainly the crude oil prices are certainly front and center when the airlines are looking at how to manage their near-term input cost. The good news is I think revenge travel is alive and well. So we've seen in our proprietary work, for example, airfares are up some 30 some odd percent year over 3 year. When we look at the months of June and July. So yes, crude oil and jet fuel kerosene is higher, but so far we're seeing a very nice offset on the demand side. And that's, I think, one of the reasons for the second quarter, Delta Airlines should have a double-digit EBIT margin.
And Steve, Rachelle here. Obviously, as you mentioned, that revenge travel, a lot of pent-up demand still from people sort of locked up during COVID. But how long do you expect that to last for? If the prices do stay so high, at what point do you think we might potentially see some demand destruction?
Yeah, sure. Great question, Rachelle. I think that, for 2022, and stepping back from that, the summer travel season as we get underway really seems little to stop the revenge travel trend. So this is possibly the very first time in the pandemic that we've seen infection rates rising, but not necessarily hospitalization rates rising in these major urban centers. So a lot of the fear that had existed with these virus waves that we previously had is now mostly gone. So I think that's a good setup for the summer travel season. And as we look into the back half of 2022, we've had 2 years of travel constraints. So the second half of the year also looks good. I think as we get into 2023, there are going to be some broader questions about the economy, as well as crude oil and other input costs, and maybe there's going to be some moderation there. But the next couple of months look pretty strong. Prices still rising, and no real elastic reaction from that, which, on a normal cycle basis would look pretty amazing.
Yeah, Steve, Seana mentioned Ed Bastian there. He said prices will go up 25 to 30% this summer. We may soon see if there's demand destruction. We talk about jet fuel surging, of course, the demand at an all-time high, but this pilot shortage, how do you quantify it? How severe is it, and how much is it factoring it in to the price increases?
Yeah, so one thing's about the pilot shortage, that is an important issue. And I think one thing that we have seen is the airlines reticent to add a lot more capacity. So nobody wants to be in a situation where they add a full summer schedule and then suddenly, whoops, they don't have enough pilots or flight attendants, and you have to pull some of that back. So in terms of the certainty in these schedules, the group wants to ensure that it has enough crew and equipment in the places that they need to be. With the pilots and demand coming back so strongly, there is some kind of struggle to really keep pace, the throughput of getting new pilots hired and trained and into flight simulators and then into the cockpit. All of that takes time. So I think you're going to see, because of the pilot issue and sort of flight crew issue more generally, maybe kind of 20 some odd percent conservatism in some of those summer schedules. And it's possible that the U.S. majors are going to be a little better positioned, than the regional airlines, for example. And that's partially because pilot salaries at the majors are better.
Steve, you mentioned the fact that we've seen so many flights canceled. Thousands were canceled over Memorial Day weekend. When you talk, though, about this pilot shortage, obviously we have a long way to go. But how long do you see this issue potentially persisting for some of these airliners?
Yeah, this is going to be possibly a tough medium-term situation. So when one thinks about what happened at the onset of the pandemic, let's say 2020 and into early 2021, a lot of crews and employees took early retirement packages, and maybe some of the senior captains across the fleets decided that they're going to leave the industry. So I think one of the signals of the protracted issue or potentially protracted issue on the pilot side is now perhaps some effort to wiggle around the retirement age with some of these pilots. And in the old days, for example, you used to get a lot of pilots from the military. Some of that is still occurring, thankfully, but, on the military side, possibly you're seeing more drone flights as opposed to, manned aircraft, now relative to 30 or 40 years ago. So it doesn't seem that the pilot situation is going to be resolved overnight. And you've seen the more proactive carriers getting out there, establishing their own flight schools and trying to buttress their own flight schools, as I don't think we're going to wake up on January 1 and this problem's going to be gone.
And speaking of the carriers, when you look at some of these small up-and-coming airlines trying to enter this space versus some of these more established ones, what does this time mean for some of these larger ones versus some of these smaller ones trying to come into the market?
When one thinks about the large ones and the network airlines now versus 20 years ago, you have a lot more consolidation, a lot more pricing power, and you have big airlines in major hubs with a lot of muscle out of their main hubs. So 80% of the U.S. market is just 4 airlines, and that certainly wasn't the case, 2 decades ago. With the new entrants coming in, I think the aviation system here is set up that in a manner in which barriers to entry are not impossible. I think my sense is those new entrants possibly going to look for a niche, a particular niche that they see as unserved. And that's going to be possibly a place where there could be an opportunity for some of these new competitors. But if we're going to say, a new airline with 10 planes that's suddenly going to try attacking Delta Airlines on its routes, I really don't think that's going to go very far.
Tough space indeed. We do thank you. Steve Trent there, Citi research analyst. Thank you so much.